Hello, Damian. Nice meeting you.
You too.
How is Tel Aviv so far?
Well, I have to apologize. I've come from London and I brought the rain, so...
Yeah, seemingly. You hope to find it much warmer.
Absolutely.
Okay,
But
so
it's been
let's
lovely.
begin by stating the obvious. As Vanessa said earlier, not every company which follow the principles of ESG will also be considered as impact investment. So how do you see the main difference between those two?
Yes. So, actually, let's state a different obvious, one that hasn't always been obvious in the past. Every investment we make has an impact. Now, what's interesting is historically we have been unaware, or we haven't always cared about that. But in the last few years, I think we've recognized that difference. And all of a sudden, once you do, then you start thinking about investing differently. And you cannot go back to the investing in the way that you have in the past. Vanessa did a wonderful job at explaining the intentionality and the differences between those. We tend to think about it simply often in terms of the goods and services the company makes relative to how it operates as an organization.
So can you describe the way that you at Barclays, a universal bank with investment, corporate, private banking, implement ESG and impact in your daily decisions where to buy a certain stock or to lend money to a certain company?
Yeah. So it's been very interesting. I mean, over the last, probably I've been involved in the space probably more than a decade. In the last 5 years in Barclays, the transformation has been quite extraordinary to see as it's moved forward. So that it is part of products, it is part of governance, it is a material risk for us as an organization in terms of everything we're doing, the products that we offer. I mean, even for working on the Israeli green bond, the 2 billion green bond, book running that, we are seeing this transition across the organization. Now I sit within the private bank, so we're talking to families and family offices about their investments. And I can tell you today, we will not invest in a company without at least doing the ESG analysis to ensure that we understand the material risks to a company.
So many people wonder if impact can be implemented only into a green, progressive industry such as, high-tech, renewable energies. Do traditional fields also have the potential to attract impact investors like yourself?
Absolutely, and actually we need to. When you look at greenhouse gas emissions, 75% of those emissions are coming from traditional industries, energy production, transport, buildings. All of these things are traditional in many respects in terms of how we work, and we cannot leave those behind. It's difficult to say that we need to invest in those industries and in those companies, but ultimately we do not achieve our climate goals without it. The way that we think about it oftentimes is, you, especially as an investor, you can't only invest in green companies, you have to invest to make companies green. And that is a transition process that I think we're seeing and will see accelerate.
So speaking about this process, at the Israeli context, it has been said that natural gas is so-called green energy because it reduces emissions versus, for example, coal or other fossil energy production. Well, it definitely ensures electricity supplement at times of war in Europe. However, can gas truly be seen by international standards as an environmental industry?
It's made energy available, but at a higher cost in these times. So, and ultimately, it is arguably greener, but to the point, it's not green. It produces greenhouse gas emissions. There are less environmentally impactful ways to generate electricity than through gas. Now, I think at the same time, what's interesting is you start looking at where taxonomy, so the EU actually included gas in its taxonomy. And this is interesting also where there's a difference oftentimes between governmental views and politics and as well sort of the investor view. So we have that within the taxonomy, but from an investment perspective, both for us and our clients, we aren't necessarily including gas as part of a green investment.
So you know what, let's generalize the question. Do you believe in impact as an evolution, a process in which existing industries will change their activity over time, or as a revolution in which, blacklists of companies should be banned of investment completely?
Look, to the first point I made, it's a revolution in how we think. about investing. The last revolution in investing was not the 2008 crisis, not so much before that, 1952. Markowitz puts in a modern portfolio theory which says we have to look at risk and reward. Prior to 1952, we only looked at reward on investments. By incorporating risk in a risk-reward trade-off, you started to think about investing differently. I think fundamentally what's happened with impact is that we are now thinking about this in a radically different way. The reality, though, is this is an evolution. You saw the results in terms of how companies are operating. You see investment managers making progress. But ultimately, this is a new way of thinking about how do we invest in the world and what impact do we want the capital that we put into the world to make.
Is there a proven direct connection between impact investments and higher yields or returns on the money? To what extent do we have evidence in research regarding the profitability of such investment in the long term?
I wish there was. But there's nothing definitive yet. And I think, well, we're at a university at the moment, right? So, research always disproves the negative, right? We can't prove that. There's been an increasing number of studies. I think about, there was a meta-study that was done a few years ago, University of Hamburg, 2,000 other studies, those teams, bless them, reviewed to look at the implications of it. And what they said, it was, there was not a negative impact, that it was positive or neutral. I think about it also in terms of our clients, and actually we've done some research on this as well, where we've been involved in a survey for a number of years. This last year was about 150 families, average net worth about $700 million. And we asked them about their experience. 83% of them said their impact investments had met or exceeded their expectations. But what was interesting, to me what was interesting is we also asked them to compare them to their traditional investments. And we asked them about the historical performance and the current performance in the current year, but also the future. In those cases, about 50% met or exceeded, with exceeded about 10% of the time. So a little bit less than traditional in terms of that. Mm-hmm. What was more interesting, though, was when we asked them what they expected in the next 5 years, whether or not that meet or exceed, the exceeded percent went up to nearly 40%. So we've got these wealthy families saying we expect our impact investments in the next 5 years, 40% of the time, to exceed the traditional investments.
Yeah, maybe this is the reason why we need so much regulation to instruct the market to go green. How critical is the role played by governments today and international organizations in shifting the investment industry to ESG parameters?
Regulation sets the ground rules of how we as financial institutions operate. So it is critical in terms of setting a level or a playing field, and governments are critical in terms of how they are operating in relation to how we address and how we operate both in the jurisdictions, but also how we think about those jurisdictions. And the extent that those different jurisdictions have sort of the governance around them, the opportunity set that we see there, all of those things I think are ultimately critical for how we operate and where we actually want to operate as well.
Mm-hmm. If I understand you correctly, impact is still very much led from the outside.
I don't know if it's from the outside so much. I think
is it like a bottom up that companies themselves wish to adopt on a larger scale?
Look, I think we heard about entrepreneurs who this is core to their DNA.
Is it the exceptional or the routine?
No, I think we also, from the research as well, you see where consumers are driving this. You see where the zeitgeist is recognizing that ultimately how we operate is going to be a critical factor to whether or not companies and the trust that we have in the companies actually wants to continue on.
Mm-hmm. So looking forward, do you anticipate that firms which will not rethink impact and social considerations as an integral role to their economic activity will then eventually left with less investments or be less valuable in terms of their stock?
Yes. Yes. Ultimately, when we look at, as an investor or as a consumer, the companies that we want to invest into are the ones that are having proper environmental considerations, employing a wider and diverse community of employees or engaging with stakeholders, having good governance structures and processes. All of those things are critically important. And then moreover, not every company is going to be solving one of the SDGs. Let's be realistic about it. But for those companies that are solving the biggest challenges that we have around the world, those are the biggest market opportunities. And as an investor, that's who you want to be. And on the other side, if you're not, why would I put my money with you relative to someone else who is?
Right, so these incentives are very good news. Let's focus on the challenges. What do you see as the impact economy's biggest challenge for years to come, for the upcoming, I don't know, decade or so?
I don't know, I've been around for a bit of time. And there's a constant challenge, the new challenges. I think, maybe think about it this way. The industry is probably at an adolescent stage, right? It's not nascent, it's not mature. I think everyone wants it to be immediately clear and transparent, and what we see at the moment are the frameworks and the structures being put into place to improve that. But it's an awkward time, right? Things are not always going to go well, and we are improving and changing how we operate. So for me, I think the challenges are to get through that awkward stage, and to do it also with the core understanding of what it is that we're trying to do. We talked about, or Vanessa mentioned, greenwashing. I think the risk sometimes is that we are concerned so much about not doing the wrong thing that sometimes we're not spending as much time doing the right thing. And by that I mean, let us go back to what our intention here is. We are trying to make the planet more just and sustainable, and therefore thinking about how does the capital we use contribute to those solutions? How does the capital we use catalyze those is really the critical thing. And overcoming the awkward phase where, quite frankly, a lot of people say they're doing it, but actually aren't doing it very well is actually incredibly important. You know, I think about it just on, I became, maybe people, a slight baker during lockdown. So my sourdough bread was not going to win any Michelin stars. And at the moment, what we say is, we've got a lot of people that say, oh, I bake now, great. But ultimately, how well they do it is still the challenge that we think we need to work through at the moment.
Right. So let's hope this industry will continue developing. Damian Payiatakis. Did I pronounce the name right, by the way?
Yes.
Okay, great. Great having you here. Thank you for being our guest at this conference, and I'm sure everyone has takeaways from your insights and your experience. So thank you very much again.
Thank you.
תודה רבה לדמיאן על השיחה המרתקת.